Also in focus as we head towards the US session, Apple shares have jumped in late trading in the US after stronger than expected sales last quarter and a forecast for a return to growth in the current period. The iPhone maker also announced the largest share buyback in US history. Let's get into a conversation with Matt Bloxham from Bloomberg Intelligence, who's been poring over the details of these numbers. Matt, very nice to have you with us. So, I mean, there's a host of surprises to pick from here. Which would you home in on as being most significant?
China. Because that was the really big focus for the last few weeks, and we had lots of channel checks suggesting that Apple had a terrible first calendar quarter on iPhone share, and actually, whilst revenues were down 8% in China, and it's about 18% of their total revenue, the market was looking down for about 11% down, so it's better. And Tim Cook's commentary on the earnings call was surprisingly positive, so positive that analyst after analyst asked him a question about, is this really true what we're hearing you say about China?
So you're suggesting it's not the iPhone that's struggling in China?
Exactly. He said, iPhone was up in the quarter, which people really struggled to hear, and it was other products that were the problem, which they obviously have to fix. But those other products include things like the iPad, which overall for Apple were down 17% in the quarter, and that's because they've got a product refresh that's announced next week, so they're expecting better sales from that next quarter. So China really there was the big thing that surprised people, and I think some analysts are waking up this morning still not quite believing what they heard.
Well, the share price reaction was pretty strong, and a lot of that seems to be more of a buyback story than anything else. A record buyback there. I think we have a chart that's coming up that talks about just the amount of cash that Apple's sitting on and the buybacks that you're seeing. We have it on our screen right now, and just for our global audience that are watching us, the top panel is the cash profile of Apple. So you can see that it is still very, very high, but obviously coming down from its peak a couple of years ago, whereas buybacks have been steadily rising. Guy and I have been in debate about this all morning. What do you do with the amount of cash? Is this a no-brainer that you just deploy it into the buybacks?
I think so, because, I mean, let's put it in context. $110 billion sounds like a lot of money, but it's 4% of their market cap. There are plenty of stocks, that are relatively low growth, but let's face it, Apple is relatively low growth now, that you expect to get a yield, that their dividend is only about 0.5%, so 4.5% total return on Apple, not that much. Now, obviously, the technology market is changing all the time. There's so much money going into generative AI. They are sitting there, and they can't help themselves but make cash. $90 billion of revenue this quarter on a 30% operating margin. They're just making money every quarter like they can't believe. And over time, they're going to get back to a kind of net neutral position on the balance sheet. But they want to have that optionality, that strategic long-term optionality to invest hundreds of billions of dollars into the next technology so they remain this multi-trillion-dollar market cap company they are today, and to reignite that midterm growth story.
What's it say about the fact that you have a huge company, massive company like Apple, moving around on the stock market as much as it is right now? Does the analyst community is questioning the China stuff? It's clearly struggling to understand what is happening under the hood at Apple. The market is clearly struggling to kind of price Apple and all of these big technology stocks. They're really stocks of this size should not move this much on an earnings number, yet they are. Why are we getting that kind of? Is there a disconnect in terms of the understanding? Is it just that the market kind of has pushed the stocks so far? I don't understand why stocks of this scale are moving this much.
Yeah, and I've not looked at the volume, but I guess they can move around this much on relatively small volume potentially, so that might be one question. But I mean, ultimately, still people cling on to the fact that companies like Apple are kind of these big kind of hero stocks. This big idea that they're incredibly well positioned in the technology cycle. The world is going more and more tech every day. We kind of wake up, and that someone like Apple, such an enormous dominant player with all of this cash, has to be a massively important part of that future. And there's still huge parts of the economy that have yet to make that transition. And if they get it right, and people want to bet on the fact that Apple's multi-decade history means that they will get it right, that still means there's a big growth opportunity for them over the next 2 or 3 decades.
But is it kind of as black and white as that? Is it they get it right, we're great. If not, they're IBM. They're kind of these companies that have really struggled in the past, had great kind of starts and then struggle.
I think that there is that risk, and there, I mean, we see it on Tesla too. There are bull bears. People have kind of very polarised views on what this could happen. Obviously, there are companies like IBM that go from hero to zero and back to hero again.
Exactly.
So that they could go through that big cycle.
Matt Gracie, thanks very much indeed for stopping by on Apple. Matt Bloxham joining us from Bloomberg Intelligence.